Ladies and gentlemen, welcome back. Requesting all our guests to please settle down as we start with the next panel discussion. For that, we would like to invite Mr. Ganesh Nadkarni, partner private equity at IDFC Alternatives, to come on stage and introduce our panel members.
Ladies and gentlemen, very good morning and a very warm welcome to the consumption panel. India turn of tide. Is the tide really turning? Election was the first inflection point, and after that we have seen there are certain trends. We have seen political stability, micro stability, currency stability, better business confidence, better investor sentiment, but these are the early days. We can't say the tide is turning. We are certainly seeing some emerging trends. We are seeing our economy coming out of stagflation and moving towards growth trajectory. We are seeing inflation heading lower. We are seeing government undertaking certain pro-business, pro-industry reforms. We are seeing higher corporate governance, and we are seeing lower bureaucracy. Capital market has been responding very positively to all this. However, most of the steps taken by government so far have been baby steps. There are no big bang reforms. And one of the international investors was asking, we are hearing sizzle, but where is my stake? If after the sizzle, if it drizzles, everything will fizzle. So it's true, it can fizzle, but I'm very optimistic. I feel Indian economy is so strong, and because the underlying of economy is demographic dividend, and which will definitely, in light of the current macro reforms and political stability, will come out very well. We believe that Indian economy has potential to move from current $2 trillion economy to $5 trillion economy in next 10 years. Ladies and gentlemen, India has got one of the most attractive consumer market. It is placed at 800 billion, which includes food, it includes agri, it includes healthcare, education, it includes luxury, leisure. It's a very broad canvas, and it is believed that in next 10 years, this market will at least 2.5 times. It could be around $2 trillion. Just as a precursor to our panel discussion, we are going to focus on consumption. Let me lay out certain demographics. Most of you may be aware, but let me just lay out. Half of the India's population, which is 1.3 billion, is below age of 24. And only 8% of the population is above age of 60. 65% of the population is a working population. The middle class is rising. The household income in middle class are more than $3,000. And at $3,000, you see significant change in the pattern of consumption. As more and more people are moving to urban areas, women are working now. As a result, there is a higher discretionary spends and more money available for education and healthcare. Rural economy still continues to thrive well. There is a money at the bottom of the pyramid. And because of the unprecedented increase in the land prices, there is a wealth generation at rural areas as well. So in next 10 years, we will see more and more Indians will have their pocket full of money and their hearts full of dream. That means more and more aspiration and a longer shopping list. And that's the reason we feel this is a very attractive place for private equity investor. The demographic opportunity can be played in multiple ways. It can be played through healthcare. It could be played through education. It could be played through food and agri. It could be played through financial services. It could be played through housing and many more. Most importantly, Indian middle class is aspirational. So as a result, the brands will also matter. We are really privileged to have an excellent set of panelists today. Let me invite the panelists. May I invite Mr. Anil Jain? Anil Jain is a managing director at Jain Irrigation. It's a leading agri-business company. It is globally the second largest micro-irrigation company. It is largest manufacturer of mango pulp, mango puree, and is the largest manufacturer of tissue culture banana plants in the world. May I invite Swami Swaminathan? Swami is the executive chairman, Manipal Health Enterprises, a leader in the healthcare industry. They're having 16 hospitals, 5,000 beds, connecting over 2 million patients, and which is supported by over 2,000 doctors and 6,000 nurses. May I invite Mr. Ullas Kamath? Ullas is Joint Managing Director, Jyoti Lab. JLL is an Indian FMCG, and it has a prominent brands like Ujala, Henko, Margo, Exo, Prill. JLL is known for reasonably priced innovative products, which usually cater to common men. Mr. Biani was the fourth panelist. He had just intimated to us because of the personal emergency, he may not be able to come, but I'm sure our panelists will be in a position to answer some of the questions which I had in mind for him. So my first question to the panel is, while from outside everything is looking good, but you are the captains of business and you are connected with customers, suppliers, farmers, can you give us a quick download? How do you see, what is the ground reality? Are you seeing real change or it's all research?
Yeah, thank you. I'm obviously, cautiously optimistic. Huge expectations. I think if I were to sort of talk about it, I think great expectations. Thanks to pervasive communications, I think every single man on the road today talks about development. I think this is a huge opportunity because there is a groundswell of expectations. But having said that, I think the initiatives that we are getting to see on the ground, I think, the earlier panel talked about it in some detail. Make in India, I think, is an extraordinary concept. I do believe that if we have 1 million people looking for jobs every single month, I think obviously there is a great need to expand employability in the country. The Make in India campaign, the focus on infrastructure, particularly infrastructure around healthcare, around education, around power, around transport, I think these are going to be extremely critical and vital. We are seeing some noises, we are seeing some good policy pronouncements coming in, and that's a good part of the story. But I guess in this game, it's never about running a marathon, it's about actually finishing on the finish line. And therefore, the jury is probably still is out, but great initial moves we are getting to see across different segments. But, I think somewhat of early days from my perspective.
Anil, what do you think?
I kind of endorse the sentiment that the future which is there for us, I'm talking more in the rural area, in agriculture, fruit, vegetable space in general, is that there are extraordinary opportunities before us. And when I say extraordinary, you're not talking of growths of, instead of 10%, 20%, but you have opportunity to kind of double your businesses in 2 to 3 years. That kind of opportunity awaits. But before that can be harnessed or exploited, certain things still need to happen. And in the current year, especially being the first year, and also fiscal situation of the government not being that great, I think it is going to be possibly next fiscal year where you start seeing changes which will impact situation on the ground.
Sure.
So sentiment is better, confidence is better, but I believe on ground reality, in few sectors, maybe mining or coal power or production, certain things have happened. Oil has helped, like the polymers we buy, they're down. So in fact, in agriculture side, whether you look at agriculture commodities or things which go into agriculture, there is already a deflationary scenario. So we are trying to grapple with that kind of deflationary scenario right now. But that might be a pain for this quarter or maybe another quarter, but thereafter, this kind of lower pricing is going to be great boon for overall opportunity and value creation scenario.
Sure. Ullas, what do you think?
It's the same story everywhere. Feel-good factor is there, and we at Jyoti in consumer goods business, we cover 1 million retail outlets across the country every month. And it is clear that when compared to the same period last year and now, we are far, far better off. And trade is stocking more stock, and there is a stability in the business. Rural is not doing that well, and it's only because the base is very high. The rural took off in 2006, 2007. It's mainly because of the like government's investment in social sector, and also big companies looking towards the rural India in a big way after reading bottom of the pyramid of Dr. late Prahlad. Till then people didn't know what is the bottom of the pyramid. They knew there is a pyramid, but didn't know where the bottom of the pyramid was. So rural focus was very, very high in 2006, 7, 8, and thereafter when the government started spending lesser money in the rural sector and the infrastructure project did not do well as much we expect them to do, because in infra, 35% of the money goes towards the labor, and the labor are from rural India, and they have the money to spend, and when they start spending the money, the companies start supplying them, and when they start getting used to use the kind of a product, then they start continue to use that. That was tapered down in the last 2 to 3 years, and currently urban is doing extremely well, rural is okay, but trade is doing, started doing stocking the goods. That's a good news. So overall, for small companies, rural is still doing very well. For big companies, because the base is large, I would say about 600% growth, but urban is doing 12 to 14% growth for bigger companies.
Okay. So Anil, with this, let me ask you the first question. Agri continues to be one of the important for the country, and the agri productivity in India is one of the lowest. While on one hand, India produces agri and milk, which is the number one, but on the other hand, the productivity is 1/3 of the global. And as a result, do you see any opportunities where people can focus on efficiency improvement, agri improvement, technological improvement, and as a result, there will be growth and also investment opportunities? And are there any opportunities in primary and secondary processing?
Sure. Just to give a perspective on agriculture in India, India has 140 million hectares of land under cultivation, more than any other country, and it has 120 million farmers. And if you look at about 4 to 5 people in a family, there are about 600 million people dependent on agriculture and agriculture income. The urbanization has started, certain amount of migration is taking place, next generation is moving to the cities, farmers are trying to see that at least one son or daughter could become an engineer or, and go into software or some kind of an additional income, because they treat agriculture as a drudgery. Agriculture is not something, the person who will stay back onto the farm is the person who is supposed to be less intelligent, and somebody who is better would actually move to the cities. That's the status of agriculture for a long time. But wherever farmers have embraced technology, wherever farmers have been able to get access to capital, these small farmers have done great wonders. We have examples of 2-acre farmers growing 100 tons of sugarcane per acre as against national average of 30, and even average of Brazil is 55 to 60, which is one of the largest sugarcane growing country. So with right technology, even a 2-acre farmer can make world level productivity. Now, for most of the crops, Indian productivity levels are low. India produces now about 250 to 260 million tons of cereals and grains. It is expected that we need to double that over next 2.5 decades to feed the growing population, as well as people eating more and people eating different. Available land is going to become less. From 140, I think we might go down to 130 or so, because land is getting converted into urbanization and there is no other new area which can come in. Another factor on the water side, India has 17% of world's population and only 4% of world's freshwater resources. Even out of those 4%, 2% are actually in Himalayas, so only about 2% which one can utilize. So for the growth of agriculture, to produce double, you have to use less. You are going to use less of land, less of water. Labor availability is a challenge. Fertilizer you cannot use mindlessly anymore, because it is creating problems with the soil. And another bigger challenge which is coming up right now is this whole climate change. And one may argue, till, as they say, cows come home, whether it is caused by human beings or otherwise, but climate change is a true fact, and extreme weather situations and events around the world are proving it. And that is creating even, significant impact on agriculture as we speak. So unless technology is used, which can be used by a small farmer of 1 acre or 2 acre, we don't think we can increase not only the productivity but production also. Both needs to be increased. But this has to be done in a manner so that the farmer, he would be able to share that value which is being created. What happened in the earlier first green revolution, and that's how majority of India has remained poor or rural areas have remained backward, that the majority of gain that moved to the cities and to the consumers and did not remain with the producer with the green revolution. But I believe in the second green revolution, the farmers, they have also become aspirational. It is no more situation that destiny has given me and this is all I do. The farmers want to make money. If they were making earlier 5,000 rupees an acre or 10,000 rupees an acre, they want to now make 1 or 2 lakh rupees an acre as well by doing cash crops, value-added crops. And that brings me to the next point, that because now there is a sustainable possibility of a supply of uniform and good quality fruits, vegetables and other things, the whole food processing industry, primary and secondary level will also grow. Again, their statistics are such that country like Brazil, which is also emerging country, processes somewhere close to 65 to 70% of their fresh produce. India is in single digit. So there is a long way to go. Now as both partners start working, husband and wife, convenience food, processed food is going to go through a huge amount of growth, because also retail is improving. So as the distribution improves, supply improves and the demand, all three are coming together. So enormous opportunity, but it has to be done right with the help of technology, and more important, coming back to the earlier story of the morning, through the extension and training, because it's not only technology, the knowledge and capital, all three will have to be given.
Thanks. Ullas, I have two questions for you. One is, in India, there are billions of customers, but there is no single private distribution system. Everybody has to develop his own distribution, own retailers. So the new guys who are backed up by private equity or entrepreneurs, how will they, compete with the incumbent guys who have developed own distributions? And second question, in India, there are many states, and each state has its own dynamics. For example, Gujarat and Maharashtra may be growing because of the growth in Indian GDP, whereas Kerala may be growing because of the growth in Middle East, because many of the people working there are in the Middle East, right? So as a FMCG, how do you manage the different diverse demand and patterns?
Very good question. India is, we need to see as, like country of 30 countries, because each state is different, the way how they behave is different, the kind of money available is different. So the first question is that when a newcomer comes with his consumer goods in India, what kind of distribution setup you need to have? Just to give you the numbers, India has 650,000 villages, 650,000 villages, and India has 6,200 towns, and India has more than 65 towns, which is more than 10 lakhs population, and 70% of the people live in rural India, whereas the consumption in rural India is only 40% of the consumer goods. Added to this, India has 446 channels as of yesterday showing the TV commercials, and 65% of the people are able to see your communication. And urban is almost 95%, and rural is about 40% of the people are able to see your communication. So communication is very, very easy. You can reach everybody, and with your 10-second or 40-second, you can always make your product known to the whole country, quickest possible way. That's one side, the positive. The negative is that the distribution setup in India in the last mile is next to impossible, because the to reach 300,000 villages, 50% of available villages, your cost would be more than the cost of the product itself, because there is no meaningful way of distributing to the goods to the 5,000 population village or 3,000 population village. And also, there is no aspiration for the trade to go till there. So most of us, we focus up to 10 to 15,000 populated villages. That's about 250,000 or 300,000. And rest of things, we leave it for the wholesalers to pick it up from us and take it to the villages. But there is unexplained setup for the newcomer to enter the market. And the top 5 distributors take away 90% of the FMCG business. In any town, the top 5 distributors take 95% of the business, and 5% is done by rest of the people. So there are quality distributors across the country, but there is no organized way to say that, okay, I deal with him, he'll supply entire country. No, that's not this as of now. The second question of yours is that how do we deal with different states, is looking at the kind of per capita income what they have, like Kerala. Just to give an example, because you took that Kerala topic, each household gets 20,000 rupees on an average per month inward remittance from Middle East. My question is that why should they work at all? If every household has its own land, it has own well, it has own tender coconut tree, and they have their own villas, and they get 20,000 rupees every month coming from their relatives, kith and kin from Middle East, there is no need for them to work, and that's why you don't get the labor there. Labor cost there average is 1,000 rupees a day. You don't get the labor at all. So that's the country wherein you can sell whatever you want. That's the place we can sell whatever you want, and it's a 3% is the population of the country resided in Kerala, but they buy almost 15% of the consumer goods. That's the kind of quality of the life what they lead. Second, contrast to that is Orissa. Then you need to deal differently there. The product will be the same, but the way how you reach them is different. And one has to understand nitty-gritties of each and every state, but there is a huge potential for consumer goods across the country.
Ullas, I think you have given a very interesting insight. Devendra Bhai sitting here, we have investment into Parag milk and cheese products. I think they have not explored Kerala. I think that's another opportunity we should certainly explore. Now, shifting gears, the consumption and the demographic story can also be played through healthcare. So, Swami, coming to you, it is expected that healthcare industry is going to be around 160 billion by 2020, and this is on the back of higher spending, insurance, etc. And so it's a large industry on one hand. On the other hand, we are seeing there is a paucity of skilled doctors. The costs are going up. Also, for the investor, the returns are not as attractive because the valuations are also higher side. Do you see opportunity for any affordable mass scale healthcare solution which can really be encompassing entire country? And obviously, there will be a lot of investment opportunity in that if it is possible.
Sure. Let me start off by saying that I'm not been too old in the healthcare industry, about 2 years. So a couple of things that I'm going to be sharing with the group here is really, an outsider view, if you will. But having said that, I mean, the reason I moved into the industry was really because of 2 reasons. One, I honestly believe there are tremendous growth opportunities. I'll try and articulate that. And number 2, I also believe that there's a huge opportunity to transform the industry itself. So those were the real 2 imperatives with which I moved into the industry. Now, I'm really not looking at the industry in value terms. It's not about 160 billion, but it's really about how do we provide healthcare to 1.5 billion people as we move forward. I think that's a larger question, and that throws up very exciting challenges and, of course, opportunities as well. Let me share some data with you why I believe that there's a huge need to focus on healthcare in a very, very different manner. It will obviously, in a good day like this, the data that I'm going to be sharing with you would be a little depressing, but since the industry itself feeds into removing of pain and care, etc., I think it's important that I share this information. Just the last about 6 to 8 weeks, I picked up some data from different newspapers. So one read, the headline was, in India we have 50,000 mothers dying on childbirth every year. We have close to 1 million infants dying at childbirth. Yeah, we have 15 million people impacted by blindness, which is almost like 1/3 of global blindness. The thing that, at this age of mine, the thing that bothered me most was this data point which says that there's one person in this country who is getting impacted by dementia every 4 seconds. That's the other data point that I picked up. They say that the number of Alzheimer's that we have today, it's going to double in between now and in the next 15 years. Every 2 minutes, we have three persons actually becoming fatalities from a cancer standpoint. Now, I could go on and on, but these are data statistics that I've just picked up in gleaning through the last 6 to 8 weeks of newspapers in this country. But having said that, I think therefore, to me, growth is really not a brainer. I mean, at the end of the day, if this is what it is, and if this is the kind of problem that we have, and this is the kind of intensity that we need to deploy, I think, I've honestly, in the last 18 to 20 months that I've been in this industry, I've not really bothered about who my next customer is going to be, which is what, troubled me the last 35 years that I've been in corporate life doing different products and services. But having said that, I think the impact is really about how do we then, what's really the constraint, to your question of saying that, there is a huge thing that I have realized in this industry is while we run businesses, there is the intensity with which there is a social obligation involved is humongous. I mean, I've honestly, I had not experienced this in my earlier life, and this has been a big leveler for me of saying, how do you actually balance both the business imperatives of the kind of industry that I am in, and also, meet the social obligations and really provide succor to the kind of statistics that I do. Honestly, you talked about the shortage of talent. It's a huge problem. We have close to 400 medical schools in this country producing 50,000 doctors. The data points are we are 1 million doctors short, 1 million. And we can do whatever it takes as we move forward, and I think we'll continue to be impacted by this, and therefore there are going to be a large number of people, particularly at the bottom end of the pyramid, who are not going to be able to afford or access, because when economic theory, surely, if you look at it from a customer standpoint, if supply is, if demand is going to chase supply the way that it does, there's no way on earth that the bottom of the pyramid guys are going to be able to afford healthcare. So to me, while growth is not is a no-brainer, I think the focus is really on how do people like us in the industry, how does this country really start differentiating? I think that is going to be extremely important.
So Swami, let me ask you this way. Can India really create world-class healthcare infrastructure, and can public-private participation a way to reach there? Or do you think there are other challenges which hinder the growth of healthcare?
Without a doubt. I do believe, I mean, you don't even have a choice because of this kind of stuff that I just spoke about. Because at the end of the day, world-class healthcare is, I mean, we have some amazing, clinical excellence. We deliver great clinical excellence. We have some extraordinary doctors in place. There are some huge hospitals which are coming up, which have got state-of-art. The differentiation is going to really come out of technology. The fact is, are we using enough and more technology to be able to leverage all that we have? Clearly, the brick and mortar, given the insane prices of real estate, the brick and mortar is a huge, stopper for building greater hospitals, a larger number of hospitals. But having said that, I think there's a huge opportunity for us to leverage technology to actually move from a brick and mortar to a click and mortar kind of a delivery system. I also believe, given the fact that we're going to be having this the continued shortage of people both at the medical level and at the clinical level and at the paramedics level, that we have to really start looking at how do we leverage technology to globalize talent. Hugely possible. Telemedicine, there are islands of excellence that this country has now. It's just a question of bringing it together. And I believe, therefore, technology is going to be a key differentiator for us to be able to deliver healthcare to the masses.
You brought the issue about technology, and with this, my next question is on what Vijay Thadani said, that India is going to have 1.5 billion mobile phones, these are smart applications. So with the digital revolution, we are seeing the way customers are approaching product, discovering product, evaluating product, and having their buying experience. People are going to online website, but buying in showroom, and there's a reverse showrooming. Both are happening, right? And Future Group, which has largest group in India in retailing, has also tied up with Amazon, right? So both things are happening, physical, digital, which is called digital, everything is happening. What is the opportunity? Do you see e-commerce and as your competitor, or you think as a collaborator, Obviously, it's good for customer, but how do you see from business perspective?
It's a very, very tough question. E-commerce, it's just now we are seeing in the last 12 months or 18 months, e-commerce is completely subsidized, funded by people from overseas. We are extremely happy from consumers' point of view. You get a Nike shoe at 1,000 rupees, you go to a showroom, it's at 10,000 rupees. So why will I buy a Nike shoe from a showroom? I'll see a price at the showroom, feel good about it, and come back home and place an order on Flipkart and pick it up at 1,000. But whether it is feasible, is the right way of doing it? As a consumer, yes, this is the right way of doing it and that's the only way to do it. But as an industry, this is definitely not the right way to do it, because a retailer who is selling a Nike shoe, he has to pay the same rent, his increments and the salary will has to go up, and the people showcasing their products there, they know at the same time somebody is getting to the smartphone and seeing the price on the Flipkart and just say thank you very much and go there and place the order and get it and feel succeeded about it. So at some point in time it has to converge. It cannot go on forever and ever and ever. Big category is growing, is emerging as an e-commerce category. We are extremely happy about it. Urban India has picked up very, very fast. School kids are doing extremely good job at the e-commerce, and brick and mortar industry will be there. The retailers has to be there, but some point in time, this subsidy part of the cost has to go away. And if you see from practical point of view, somebody delivers to you at home at your time and you pay less. You go to a retail outlet, park your car, look for it, and you pay more. It cannot coexist. A convenience has to be, when somebody gives you a convenience, it has to be a little more expensive. At least it has to be at the same. Sure. So according to me, it's right now, there's no collaboration. There's not complementing. It has created enough confusion in the normal retail traders, and people who are in the retail outlets. They are questioning the manufacturers or the brand owners, saying what business sense it makes if you sell the Samsung at half the cost at the doorstep, and they come here and see the brand and they see the price. So they are questioning the brand owners. Sure. So some point in time, that has to converge. Hopefully a year or two. Once the money put in by investors has been used for subsidizing this, before they raise some more monies to subsidize, it has to converge. Personally, I feel.
I think in terms of rural area, e-commerce is a little bit away. Yeah. It's mostly in urban area. But what I will say about technology, that we have a lot of opportunity to use what's called ICT, information communication technology, to give information advice to farmers and the technology transfer to the farmers. So that will help them improve productivity. In terms of e-commerce, before we can create an e-commerce platform where goods can be traded online, whether a farmer selling banana in Maharashtra and somebody buying banana in Delhi can transact, let's say, online. Before that, the whole standardization, gradation, the logistic, the road infrastructure, all of these things need to be sorted. So I think some issues about rural infrastructure, including storage, gradation, transport, banking, all these need to be in place before rural e-commerce in agriculture would take place. Vis-a-vis the consumers, the young generation will pick up faster. They will follow the city guys. But I would say it is still, that competition doesn't exist in rural area.
Sure. So, billions of dollars are spent on advertising and promotion without actually knowing who's your end customer. But with the social media, web chats, a lot of information is available which can track who's your end customer. Are you seeing a changing trend in FMCG space where your money is going? How are you channelizing your advertising, distribution? Are you getting any feedback on your brands? Are you taking such decision based on such inputs and insights?
Yeah, as an FMCG company, you need to have the consumer insight in place all the time, and you need to see who is your target customer and how do we reach the product to them through the retail outlets, and also how do we get their feedback through all the social media networking or other means of taking their insight. We keep doing that on a quarterly basis, and we address them. And also customers are getting more intelligent, customers are getting more mature, and product availability for them are plenty, and you are one of the options for them. And how do you hold on to the existing customer? How do you get the new customer? It's a complete science there, and it's a complete art. And more than that, as I told you in the beginning, that having 446 channel is a challenge itself to reach the customer through the TV media.
Yeah.
And that has become now more like a software, and you have the software tools now available in the country, one of the finest software tools wherein you can put in your target customer, and the software will tell you where to invest the money, which channel you need to invest the money, when you want to invest the money. So we are tracking that.
So, last couple of quarters, demand for consumer staples has been relatively weak. And in some categories, even we have seen declining volumes, right? In the entire cycle, this sector was last one to be hit. But with the change in the mood, are you seeing any ground realities, demand pickup happening in staples?
The data what you actually track is from more or less from the P&L or the data what your AC Nielsen gives you. In reality, what happens is you have a complete chain from the company to the warehouses, to the mother godowns and the district headquarters, and to the wholesalers, to the retailers, and then the consumer.
Right.
And most of the cycles are either weekly based on the wages or monthly based on the salaries. And in that cycle, sometimes the destocking will happen. Just to give an example, because we are a rural driven company, it's very easy that if somebody is using a toothpaste for 15 days, if they decide to buy once a month, it is not that they're not brushing their teeth, but they use it carefully. They use it carefully. To that extent, if somebody from 3 weeks, if they go for a 4 weeks usage, it's a 25% drop, but that's only for that particular month. We don't have to really worry that, okay, whether the consumption has come down of toothpaste. No, it is not. It's just a moving towards a cautious way, but it has come back already. People who are destocking in the trade has already started stocking it now, and the consumption is back, at least for the last 2 months, to the original levels.
Anil, you are also getting the similar inputs?
In rural areas, incomes, in last few quarters, the agriculture good prices have come down. So farmer income levels are low on one hand. On other hand, we have seen in terms of generally industry, between let's say 2006-07 to 2011-12, every year the employees were getting 12% or more, increments, and they were kind of assured because company was growing, profits were growing, that they will get that 12%. So they went for spending as well. Right now, that is not the same situation. People know companies are not growing, and that much of increment they may or may not get. So I believe overall people have become more cautious now than let's say what they were about 6 quarters ago, approximately.
I see.
And it might, last for a couple of more quarters before it really starts picking up again.
I see. So, in general, private equity, we are long-term investor. We invest for 5 years, 7 years, right? So it is very important to understand for us what are the implications for long-term. So, it will be helpful if we can discuss for demographic dividend, the implication on consumption for a long-term, also the implication from the social behavior perspective. And is story in India different in India and Bharat? Are different stories? Are they going to be converging in some point in time?
As far as consumption is concerned, we have 1.25 billion population, so consumption has to be there. So definitely medium long term, the story is very, very positive. The simple thing is that for the people to consume, they need to have the money. Money in their hands, either they should earn. For that, they need skills, they need education, they need a job. So somebody has to create a job. Or somebody has to put the money in their hands, which could be only government. So there is nothing other than this can happen to go for the consumption in a higher scale. So sometimes government has put the money in their hands and they have bought the products. Sometimes private people have created a job, new entrepreneurs are coming in and they are creating the job. So we need also, as our former president, Dr. Abdul Kalam, as he says, that we need more job creators than the job seekers at some point in time. And we also need companies who create the jobs. End of the day, the consumption will happen only when the money is in their hands. How that money comes to their hand is something which all of us we know through the job. And to create job, education, to create job, skill, and you need job creators. The second big aspect is money towards the food and the non-food. Historically, if you take 80s, non-food was only 35% of the total money what a family used to earn or what they have in their hand. 65% used to be food. Today, it is at 55% is food and 45% is non-food, which is very, very encouraging. We expect by 2020, the food will be about 40 and non-food will be about 60. And when the inflation goes up, their investment towards food will go up and the non-food will come down. That's how you see a couple of quarters, some FMCG companies are not showing that kind of a great result. It's only because that the money which they have, it has gone towards the food. When the tomatoes are selling at 120 rupees a kilo, that month their detergent consumption will come down because there's no money to buy detergent powder that much extra. That's the way how the things will work. So medium to long term, amazing place to be in because of your opening remarks, what you made that in India, 1.25 billion population, consumption story has to be there in the next 5-10 years in a big way, and this is the right time to come to the right place to invest in the consumption story.
So Anil, is it sustainable, do you think?
I believe it can be only sustainable because looking at the resource balance, which our country doesn't have right, except we have too much of coal maybe, but we are unable to extract. But if you look at all other resources which are required to sustain high level of consumption for 1.5 billion people going forward is not feasible unless it is backed with two things. One, productivity gains, whether in agriculture, whether in industry, and whether through knowledge transfer, skill transfer, but productivity gains are very important. And because I'll give you an example, I mean, we run business here, we run businesses outside India. We employ far more number of people to do the same thing we do outside. So our cost may be lower, but productivities are also lower in India. Same vis-a-vis the yields in agriculture, etc. So one is productivity gains, and second, optimum utilization of resources and a right balance. Because if you don't use that, you will have catastrophes and problems where the entire this whole GDP growth engine will sputter out because you don't have right resources to match it, and inflation will creep in, and you will simply not be able to do business. I mean, things like water, if they are not available, you can't do anything else.
Sure. Swami, you think it is sustainable?
I do think that if you really look at it from a healthcare standpoint, I think given the gap of demand and supply, and given the the demographic dividend that we are expecting as we move forward, I think there are huge opportunities clearly. And again speaking from the healthcare standpoint, I think the opportunity is really real. If we can get to a point of making it more affordable and accessible to people across the pyramid, because today what's really happening is that the 300 million people who are at the top end of the pyramid will and continue to have amazing access to healthcare. Technology is going to make it so very pervasive to all of us that even before you or I skip a heartbeat, there are going to be devices telling you that you're going. Sure. So we're going to get into a lot more of prevention route rather than the cure route. But that is going to be at the top end of the pyramid. The real situation is to see how do we make that quite applicable to the bottom end of the pyramid, because if that doesn't happen, I surely believe that there's going to be tremendous anger of this 800 million people towards the 300 million people. Sure. And that's something that we really need to avoid. So if you're going to be focused on all of that, and the good news is most governments, state governments in the country today are really, really focused on it, and therefore I strongly believe it is sustainable.
Right. So one quick question for Anil, agri-infrastructure, if you talk about micro-irrigation, drip irrigation, which can significantly improve yield and reduce water consumption. But entire industry today is in the subsidy, is driven by subsidy, and that limits the market size. Do you have any ways you can come over this and open this market as a complete market play, and really don't require subsidy? The yield and payback itself will pay for the cost, and market can grow. Do you have any quick comments on that?
Yeah, in terms of micro irrigation opportunity, as I spoke about 140 million hectares of land under cultivation, out of 70 million hectares irrigated, and hardly about 5 to 6 million hectares is covered with drip. So the opportunities continue to grow for 10 or 20 years. But the farmer, he has to invest about $1,500 per hectare, and that's a lot of money for him, and he doesn't necessarily have access to that capital. So if capital access through banking sector, capital markets can be created, then one can live without subsidy because of the higher productivity, payback on entire investment is 2 to 3 years. So it's possible that you can live without subsidy,
Right.
but capital access is important. IDFC is going to become a bank, so I'm looking forward to you guys to start doing something better in terms of lending directly to the farmer.
Right, right. Maybe the last question from my side. You know, we are seeing while the opportunities are large, in healthcare the transactions are happening at EV/EBITDA multiple, which is in double digits, and P multiples for consumer sector is anywhere between 25 to 30. Do you really believe that in long term, people can make money?
People have made money in the past. People are making money in the present. So I don't have any reason not to believe that people make money in the future. And in entirety, the valuation game is based on future consumption. And future consumption is based on the population. And population is what we are banking upon. And the aspirations are so high. As a closing remark, I'll tell you, I have visited close to 6,800 villages at a stretch covering 14,500 kilometers in 31 days across India just to see what is the rural India is concerned. I have seen most of the villages having gyms. I have seen most of the villages having bar and restaurant. I have seen most of the villages having beauty parlor. My question to you is that, what is the need of a beauty parlor in a rural India, in a village, when they're so beautiful anyway? What is the need to have a gym if they're working in an agricultural field?
Good point.
So if there is an answer for that, that's an aspiration. And if there is an aspiration, there is a demand. And there is a demand, we are there to meet their demands. When we meet their demands, their valuation anyway, you'll get it.
Right, well said. Anil?
I believe, yes, there is a large opportunity, medium to long term and even short term to make great level of money, because value creation opportunity in India is so much more. We talk about all these reforms, not big bang reforms not taking place. My personal view, in India, even if you just improve some mechanics, right, operational issues and remove some irritants across the spectrum, easily 1.5 to 2% GDP can go up. You don't need big bang reforms per se. And with that kind of sustained growth of 7-8%, investors would have opportunity definitely to make money.
Sure.
Of course, they have to always pick right stocks. So.
Swami, what do you think?
Yeah, I do think that, of course, there is money to be made, and the future is really good from a healthcare standpoint. But I think we just have to change our mindset from being very, very focused on the top end of the pyramid to actually come down to the bottom end of the pyramid, because
That's right.
just the other day, I actually took out this old book of profits at the bottom of the pyramid and, dusted it, because I honestly believe that there is a huge opportunity which
Right.
many of us are missing out. And I think that's going to be a huge opportunity moving forward.
So with this, may I open the panel to the questions? Please identify yourself and raise the question.
Hi, my name is Vikas. We just spoke about bottom of the pyramid in case of healthcare sector, but we've already covered large cities and the affluent population, but there's large chunk of population for which requires low cost healthcare. But a lot of our cost elements like doctor fee or cost of doctors or rentals or medical devices, hospitals don't have control. So how do you match and still make profit at the same time providing low-cost healthcare to the masses?
Yeah, I guess the story is really about, if we were to say that the wealth of 225 highest individuals in this world is equal to 3 billion, the net wealth of 3 billion people in this globally. I do think that there is clearly a mismatch between what is available and what is required. And I do think that, this is where the private-public partnership, etc., is coming in. State governments are extremely focused on it. They're rolling out programs in association with the private enterprise such as ours, so that it's essentially about taking advantage of the volume as against, restricting our supply to only a limited few. And that obviously gives us, great efficiencies. It enables us to reduce costs. But let me also say this, that in the healthcare sector, our clear understanding is there's a huge opportunity to make it extremely more efficient and effective. And I have no qualms in saying this, that by adoption of technology, by using data smarter, I think we just have to get into a much more smarter regime rather than just delivering healthcare as it is happening today. Even if you look at, it's better to go to the prevention route rather than the cure route. Today, the kind of data, digital health data that is available, with, if I were to talk in terms of just sheer numbers, today we probably have something like 200, 250 petabytes of data available. It is expected that in the next about 5 to 7 years, that will be 50 times more data that will be available. We can start, a lot of us have already started looking at it to see how do we analyze the data to be able to get to smarter conclusions, rather than just saying that, we'll continue to deliver healthcare, we'll continue to cure, diseases that as they happen. I think the state governments, the central government, the private industry, the public health people are all getting together. Pace is a bit slow, but I think they're all getting together. And I honestly believe that if we got this equation right, by delivering healthcare smarter, we should be in a position to reduce costs and make it much more affordable and accessible to the lowest end of the spectrum.
Thanks, Swami. I think we got a very good insights from entire panel. Thank you so much. And let's give a big round of applause to the panel. Thank you. Thank you so much. Thanks. Good, sir. Thank you so much.
So I hope you enjoyed and found the morning useful so far. But now we have a really much-awaited distinguished speaker to address us. I am truly delighted. It is my pleasure to introduce to you the Honorable Minister, Mr. Piyush Goyal. The most important portfolio, arguably, in the country, and portfolios, the distinguishing feature of Mr. Goyal's portfolios is that he spans 3 ministries: power, coal, new and renewable industries. We were talking this morning about the challenge of coordination. This is a most extraordinary span that Minister Goyal actually oversees, and he is truly our best hope for resolving all the challenges that he has inherited over the last few years. So the burden is really on the Honorable Minister. Mr. Goyal is a member of the Rajya Sabha, where he was answering questions just before, which is the upper house of the Indian Parliament. He has just come from there. And he has had a very distinguished political career that has spanned over 3 decades. He has held various important positions with the BJP, including being the national treasurer of the party. And being the party's national executive group as part of it, he headed BJP's Information Communication Campaign Committee and oversaw the party's most successful publicity and advertising campaign during the recently concluding elections. Some people, may not know this, but the Honorable Minister has an excellent academic track record. He is an all-India rank holder in both chartered accountancy and law. And if you understand the force of numbers in this country, you will understand what that actually means. So, once again, please help me welcome the Honorable Minister Goyal.
Thank you, Rajiv. I thought we'll keep this more interactive because by now most of you must have heard me ad nauseum and got sick and tired of the same old story. But then two very interesting observations as I entered. The first is at the door, we had two darbans. And for those of you who are not from India, darbans are gatekeepers. So as I entered the hotel and the venue, they had made sure that there are two darbans there. One runs a coal-based power plant, one runs a gas-based power plant. And they made sure that I see them, I recognize my own limitations, I understand what I'm going to be faced with today, and then I'm allowed to enter into the venue. Thank you, Raji. But what I liked most was it's such a pleasant change to see your backdrop. I was really impressed. We are used to those large, super large backdrops with a lot of material, and you keep adding material, add this guy's name, add this new angle to it, put a large picture. But this is really very smart. Whoever has designed it deserves great compliments. Thank you very much. Great opportunity to be amongst friends, amongst concerned investors, investee companies of IDFC, some of whom are also concerned. And I can only start by first reassuring you that we understand your pain points, we understand where you come from. It's clearly been a bad patch over many years now. I won't go into history too much. You've suffered that history, you've been a part of that history. But as things stood when we inherited office, most readers felt that the sky was going to fall on the head of particularly the energy sector. The coal industry was languishing with growths of about 1.5% growth in production over the last 4 or 5 years. The power generation was badly affected because of inadequate supply of coal and gas particularly. We saw some traction in renewables, but we had gone up from maybe 0 to 2,900 megawatts in solar, 22,000 megawatt in wind energy, which also was on a declining trend because subsidies were not being paid to solar people. Accelerated depreciation was withdrawn from the wind energy producers. Power producers were given a tax incentive year on year, so you wait for the next year's budget before you know you continue to be eligible for it. The entire scenario looked like doomsday had come. And in that sense, we saw in this challenge also a great opportunity to clean up some of the evils or ills that the industry had for the last many, many years, some of it dating back 40 years. Of course, when I became minister, Delhi had a power crisis due to a massive storm and exorbitantly high temperatures, which to some extent, as some newspapers reported, also helped me learn the sector with my, running along with the problems, and on the ground issues came to the surface very, very quickly in my early days of government. But from within these problems also emerged the solutions. The sector, if one goes to see, has three major dimensions which he just mentioned. We have on the one hand the fossil fuel-based power plants, most of them languishing, or many of them languishing for supply of adequate fuels, both coal and gas. We have a situation where generation capacity in the country has risen very significantly in the last 7-8 years, but coal production and gas production domestically has not kept pace with it. We have another very ironical situation where we produce surplus power in certain states, but are unable to transmit it to the power deficient states for lack of adequate infrastructure, transmission, sub-transmission, distribution infrastructure. And Delhi was one of those examples where we had power all around Delhi, but inadequate lines to push the power into Delhi in May and June last year, or rather the current year, we are still not through. And on the renewable space, there was a lot of policy uncertainty, inherited a situation where the solar industry was in a state of flux. There was an impending anti-dumping duty coming in to be notified on 21st of August. It was one of those situations where we were damned if we do and damned if we didn't. Because if we didn't impose that anti-dumping duty, it would have been a terrible message for our Make in India program. And if we impose that anti-dumping duty, as recommended by the erstwhile government, as late as on 22nd May, after losing the election and just before we were sworn in. One can argue it's a quasi-judicial process, but I still can't figure out for the life of me what was the urgency of that decision in the midst of an election won by us, but before we were sworn in, especially when the Honorable Prime Minister was known to be very passionate about solar energy. And the wind industry, as I said, was languishing for lack of clarity on tax benefits. In this situation, while in the early days we were learning, getting a grip on the problems, we were saddled also with the coal mines deallocation or cancellation of 204 mines. Many of them producing, many of them ready to produce, just waiting for the final mining lease, which was not being granted because of Supreme Court directives in the past when they were assessing certain decisions of the erstwhile government. And at that point, most people and most pink papers felt that the industry would be in a severe crisis. As we speak, the coal mines bill, which has to replace the ordinance, is just been finalized. The papers are probably on their way for me to sign while I'm here, so that it can be placed before Parliament in a day or two. And I hope you have observed that when on the 24th of September, the 204 coal mines were cancelled, the government acted post haste in a composite manner to bring about an ordinance which, going through the whole motions of making a law in a country entails, and that you will appreciate is not an easy task. From 24th of September, we worked on it day and night, so that by 20th of October, that is less than 30 days, it had been cleared by the cabinet and had become law of the land. In less than 30 days, we were able to, in a very holistic fashion, bring about amendments to the erstwhile laws on coal allocation in a manner which would resolve problems that we had accumulated over 40 years. And while there were also problems, there were also the learnings as we went along. So whether it was to do with the process of giving out these coal mines, whether it was to do with transparency and probity in public life, whether it was to do with assurances to investors that in the future, they don't have to worry when they invest in a company that any asset that the company has or any natural resource that the company has could come under judicial scrutiny or political problems because the process is vitiated. All these type of problems have been addressed in this coal ordinance. Of course, simultaneously, we've also addressed the issue of swapping of linkages, the issue of allowing companies to form joint ventures, intersay each other so that they can take larger mines or get the coal out of the mine together. 3 or 4 companies can invest together to keep their costs low. A variety of issues that were all the learnings of the last 40 years have been sought to be addressed in this. We have tried our best to ensure that end users, particularly those who have invested in power plants based on coal and who have starved for coal, who have linkages but inadequate coal supply, who don't have linkages, who don't have adequate fuel to run at economical levels of production or generation. Most of those issues have been sought to be addressed in this. We have also brought in an enabling resolution so that in the future we can bring about amendments or bring about the change in mindset to allow commercial mining in the country. We believe that there are a large number of households, large number of small users of coal who also have very serious requirements but are required to buy from the black market. And if we can open up to commercial mining maybe in a year, 2 years, as things pan out, as the end users are all fully protected and their requirements are met, we can allow commercial mining to come in and let the small user requirements also be met in a more honest fashion. I believe that will also help us to reduce the power theft, which in some sense becomes a compulsion. If you don't provide for the households, you don't provide for the small brick kilns and refractory kilns or the small boilers in SSI and SMA, small and medium industries, then obviously the other alternative is they buy from the black market. This ordinance, coupled with our efforts to increase coal production in Coal India, and by increase we are not talking of incremental growth of 4-5%, but of 100% increase in the next 5 years. And when we say that, it's not that we are talking from the top of the hat. Every single mine has been checked, verified for its ability to increase production. 200 odd mines which are with Coal India and have not yet started working have been assessed to see how many of them can come into operation in the next few years. The rail linkages which will help us move 200 million tons additional coal have been fast-tracked. In fact, yesterday evening I was with the Honorable Railway Minister, and I'm fortunate in having Suresh Prabhu as the Minister because he headed my advisory committee until 2 weeks ago. So he understands the angst of this industry better than anybody else. And he's the original architect of electricity reform in this country. So he's assured, and we are meeting tomorrow afternoon, I believe. Tomorrow or day after afternoon, we are meeting on a detailed review of what we can do to evacuate more coal in this country in the short run, in the medium term. And all of these measures together, put together, give me confidence that within a couple of years, we should have at least a situation where the plants are fully fed, and in about 5 years from now, we can easily envisage a production upward of 200 million tons. And that's the level of production which will really take India to the next level, where we are looking at power for all, 24/7 power supply to all homes, all industries, make India diesel generator and inverter free, and get all these stranded assets, all these stressed assets back on stream. Hopefully get your investments also making you some money in the process. Of course, our track record, if one was to see, we came into office on 26th of May. From June to October, coal production has increased by upward of 7%, I think it's 7.2%, against 1.3% last year. The actual dispatch of coal is up by 8.5%, and we want to gradually ramp it up to take it to 17-18% annual growth. We also increased the generation by coal-based power plants by nearly 20%, 21% to be precise, in the June, July, August period. Soon after I became minister, if you recall, there was an advisory from the Met Department that monsoons are going to be deficient. And it clearly meant that hydel power is going to be in shortage. And I had the Hobson choice of allowing the country to suffer for want of adequate electricity. There would have been massive load shedding and outages all across the country. Or to consume the stocks which are usually kept in every power plant quickly and ramp up the production of coal-based power so that the country does not suffer, the country gets adequate power. It has stressed the power plants in terms of their inventory of coal. So you often read these articles in the newspaper, power plants on the verge of shutting down, power plants have 4 days stock, 3 days stock, 7 days stock, critical supply. But the genesis of that is in the 20% increase in coal-based electricity in that period. When hydel went down, coal substituted, and ensured that everybody's homes and offices did not have to suffer from power shortages. Of course, even if you take the entire period from June to October, I believe the production of electricity is up by about 11.3% in the aggregate, all hydro, renewables, gas, coal, all put together. And in the coal-based electricity generation, upward of 15% from June to October. So I believe the sector is on the path of revival. I have a great advantage that there's nearly 20-odd thousand megawatts of gas-based plants which are currently available. They are ready. They can get into production. We can use that as a spinning reserve and bring about the peak load grid stability and management of frequency at peak times by getting all these gas plants on stream. So I hope the gentleman here who has power plants based on gas will be able to revive his plant very quickly and make sure that he gets onto stream. In the interim, we'll obviously have to import some gas, but we'll gradually try to bump up production of domestic gas, which is possible given the more stable pricing regime that has been announced. The other challenge before us was transmission and distribution, and I see that as the single most important issue on which this government will be focusing in the next few years. It's not something one can sort out in a very short span of time, but the government has already cleared $4 billion worth of transmission lines, 2 billion in the northeast, 2 billion in the mainland. We are also bringing out, or we have in fact approved, the two schemes which were announced in the budget, the Deen Dayal Upadhyay Gram Jyoti Yojana, which will help states to bring about a separation of agriculture feeders from the main feeders, also improve the transformer capacity, the distribution network in the villages and rural areas, and the integrated power development scheme, which will upgrade the distribution network and the sub-transmission network in the urban areas. Both these schemes, coupled with the backlog of investment in the erstwhile schemes in this account, will entail about $20 billion of investment. And that, I think, is going to be a game changer in terms of bringing down the transmission and distribution losses, putting a fix to some of the DISCOM problems that the country has, reducing power theft, and broadly reviving the ability of states to manage their power subsidy better, manage the utilization of power better, purchasing and paying for the power that they purchase, and satisfying the aspiration of people for regular and uninterrupted quality power at affordable rates. Overall, I envisage about $50 billion going into the T&D sector in the next 4.5 years. And I see that as the next big opportunity. There were some restraints between private sector and public sector transmission companies, some differentiated policy framework, which also has been addressed, and both are now at par, completely at par. Lastly, I'll just briefly mention about the renewable sector. Ideally, I should spend more time on it because that's the thrust area where we recognize our commitment to climate change, our commitment to environment. We are looking at $100 billion coming into that sector, and we are trying to keep it off the subsidy radar. Personally, I believe no subsidy-based regime can really help an industry flourish. So we are looking at innovative financing models. We're looking at long tenor, early periods of moratorium, long moratorium, low interest cost or low cost funding for the sector. And over the life cycle of the project, and solar, wind, all of them have a reasonably long life cycle, we believe the investors can get a very, very good return. You can repower solar assets after 10 years and then again after another 10 years. On our part, we are trying to introduce bankable entities to purchase this solar power. rather than leaving the renewable energy to the mercy of discoms, we are seeing that a AAA company comes in as an intermediary to buy this solar power, which will be a great assurance to bankers and investors about the bankability of these renewable assets. Simultaneously, we are bringing about investments in green corridors to evacuate this power. Solar energy parks are being created in 12 parks in different states. We are also strengthening the renewable power commitments and obligations, both in the power purchase side and in the power generating side. So all new generating capacity, fossil fuel-based generating capacity in the future will have a renewable generators obligation. So the obligation on the generators to have renewable power, maybe 10% or little, whatever we decide on that. All of this is being brought through a renewable energy policy for the first time in the country. And to give teeth to that, we'll be shortly introducing the amendments to the Electricity Act 2003, taking into account all the suggestions that have come from industry, from investors, state governments, discoms, consumer bodies, to bring about a robust framework to sustain this sector through for the next 30, 40, 50 years. We hope, by and large, the ordinance has not found any critical comments. Some people have said it could have opened up more, but frankly, I think it's ignorance more than anything, because there is nothing more left to open up. It's only the prioritization and the timing that we have to calibrate, keeping in mind the sensitivities of the sector, the fact that power reaches to the poor man and tariffs cannot be left completely to float. One has to take a more sensible political call on that. But otherwise, the sector is, I think, poised for tremendous growth in the days to come. As Rajiv said, this government works as an organic entity. Apart from these three ministries, the entire government of India today is working as one. So if there is an issue that you were to flag off to me, I could possibly pick up the phone, call up the minister, and sort it out as we speak, rather than go through papers and paperwork. And an example of that is, while I was leaving the house, some esteemed and honorable members of parliament from an opposition party in West Bengal flagged off their concerns about the jute industry. And Mr. Arun Jaitley and I were there, and they flagged off those concerns. Mr. Jaitley just looked at me and he said, I think we must have a dialogue on this. So as I left Parliament in the car, I located the textile minister who's in Mumbai. I told him what we need to think about or do. And at 1 o'clock, he's going to talk to the Honorable Finance Minister once he's through with his question hour and discuss what to do with the industry. I only mention this as an example to highlight to you that this is a government that is functioning as an integrated entity. Silos have been broken, departmental constraints are not there. Environment is as much a part of our working. Steel industry and power industry are working together with the coal industry, also ensuring the interests of the cement industry and the small and medium enterprises. So 10 ministers are involved, but decisions are taken real time, across the table, on the mobile phones. And in the overall context of things, I can assure you a more transparent, a more honest government, which will deliver on its promises. I have to remind you, we have a track record of Mr. Modi in Gujarat. It was the same bureaucracy which was working in Gujarat. Similar, I mean, they're all colleagues. I personally believe there's tremendous potential of government to perform. It's more about vision, it's more about leadership. And certainly the Prime Minister of India, Mr. Narendra Modi, has demonstrated his ability both on thinking big, thinking to scale, thinking bold, having a big vision, a big picture story, and the commitment and the decisive leadership to implement that vision. He's demonstrated it before, he's demonstrated it to the world, and his actions in India will demonstrate it to the people of India, to the investors who come and invest in India, to business and industry, to whom we gave a loud and clear message. and probably the first time in independent India that a political leadership has said in Parliament that we don't fight shy of saying we are pro-business and pro-poor, because we need businesses to flourish to provide jobs, we need businesses to flourish to generate revenue, and without jobs and revenue, we won't be able to serve the poor of India. Thank you very much for your patient listening, but I can assure you, country is in safe hands. Thank you. Yeah.
So the Minister has a few minutes. Happy to take questions from the floor. I was really pleased with your last quote, Mr. Minister, about this government being pro-poor and pro-business. In a morning conversation, this point was made about how distinctly different the approach of your government has been vis-a-vis business. I was saying that I'm glad you made the point that you are pro-business and also pro-poor. That how that is a subtle but a very important shift from the previous 10 years. Any questions from the floor? Please introduce yourself.
Anything more to say? But otherwise, politicians can keep going on and on.
Hi, my name is Prabir Ghosh. We run CASE Bharat. It stands for Catalyst for Accelerating Sustainable Energy. We are actually facilitating the MNRE Reinvest initiatives. We have got a workshop on December 16th. And the question we have is, we are exactly doing what Rajiv and you have just said. How can we do pro-business and pro-poor? I'm working with Dr. Ashok Jhunjhunwala, who I think you know very well. We think we have got a model that can have a 10x change. And the question we have is, this investment about $100 billion, is it just for solar? Or are you looking at, because the numbers I'm hearing is 100 gigawatts of solar and 50 gigawatts of wind. Can you clarify that?
100 gigawatts of solar by 2022. And in the next 5 years, I hope to see 40 gigs of wind coming in. So I think 100 billion in the entire renewable energy sector would be a good, big enough target, which most people in any case think I'm just talking through the hat, though I'm very convinced that this will happen.
I think we can do it.
Thank you.
Any other questions? There's a lady there. Yeah.
Nandita Parker from Karma Capital. Piyush, my question is to do with Coal India. Actually, I have two sets of questions. One is to do with Coal India. There's a very large stake sale happening in the near future. And I wanted to understand from an minority investor standpoint, how should we think about the government's role in Coal India in terms of allowing Coal India to function, in terms of maybe improving governance at Coal India, and in terms of profitability? That's my first question.
Nandita has heard me many times on many platforms. I thought I should have answered most of her questions. Very clearly, my objective, and I've said it loud and clear on more occasions than one, is to make Coal India the world's most valuable mineral company, and NTPC the world's most valuable power company. And I stand committed to that. I'm going to work on that. Coal India targets are being reset from a growth of 1.5% in the last 4-5 years, from a growth of barely 4% CAGR in the last 40 years, to 18% CAGR in the next 5 years. That's the type of targets, ambitious plans that we have for Coal India. Most people, when they talk of minority interest, there was somebody who filed a case against the government. In fact, I'd love to meet the people who filed that case, because I want to understand from them that whether A, they don't read the prospectus, B, I'm sorry if I'm being rude about few things, but I feel that people need to also hear it from us. We hear enough from the other side. I don't know whether they read the prospectus. I don't know whether they understand that the government of India has given free assets to Coal India to set up all of these coal mines without a single charge on it. Whether they understand that interest-free monies have been given by the government to this company to create what it has, because it has a mandate declared loud and clear that it is also a service-oriented company. The company provides coal. Some people call it at concessional price. I call it at a profiteering price. Because having got everything on a platter free of charge, there is no business that that company should be charging such prices, which they are. And they have the ability, being a monopoly, to reset their price as and when they like. I don't think that's the kind of company that investors should be very excited to try and protect from any service to the people. So there was some objection why FSAs were signed with the power company. Well, if you're the monopoly of the country and you refuse to sign FSA to give coal to the power generators, it's a very ironical situation. Having said that, I think Coal India has tremendous potential. We are bringing in technology in a big way. They have 200 plus mines which have yet to be worked on. Imagine if those 200 mines start working and they are all free of charge. Others will be paying auction money. These mines are all free. So if at all somebody has an objection, it should be the others, not the Coal India investors. And if I'm unfortunately not allowed to give out suggestions or tips, or it will be considered as insider trading, but you got my message.
We have time for one last question. Anybody? No, Nandita, you've had your chance, so we'll look for somebody else. Yeah.
Hi, I'm Mayank Bansal from IDFC. My question is that while a lot of initiatives are being taken which would impact the power sector in the long term, but in the short term, what is happening is that there are cash losses and power companies are not being able to service debt also. So what is being done on that front for the next 6 months to 1 year time frame?
Well, my friend, I wish you would direct that question a little more to the appraisal processes of banks, to the fact that at that point of time, plants were allowed to mushroom all across the country without any intimation also to the government in terms of where the plant is coming up, what will be the fuel source. I think people just assume that you set up the plant, you will get the coal or gas and you will produce. Unfortunately, and I'm trying to correct that in the electricity policy, when I asked my department, what is the process of setting up a power plant, I found that you don't even have to inform the central government that you are setting up a power plant in place X, this capacity, this is going to be a raw material source, this is going to be your evacuation of power. That is the current scenario. I said, this is ridiculous. Who will plan the evacuation? Who will plan the evacuation first of coal or gas to your plant? Then the evacuation of power. Who will plan whether there is adequate demand in that region? Nothing. It is just a free world. So I said that that's ridiculous. You need to have somebody thinking through an integrated, holistic manner how the sector is going to go. They said, but sir, that will be like bringing back licensing. And all the IDFC and investors won't like it. So now we're looking at a wire media that, okay, no license, but at least keep us informed. So one can think holistically as a nation where the power will go, where the fuel will come from. There has to be some thought going into it. Rather than once you have created the asset, which in many cases are now ready, now it's become my responsibility to find solutions to your question. Anyway, having said that, that was only to set the perspective, right? But we do recognize that many of these plants have different stages of being stranded. I'm in fact in dialogue with IDFC to see if we could look at a power fund or a Powering India fund. I'm open to suggestions maybe in the course of the day today. If you all can come up with some robust mechanism by which we could create a body or a a fund like in 2008 was done in the US, personally, I think it'll make a lot of money, but again, off the record. Because this is the time where in the stress, you may be able to pick up some good assets, you may be able to partner some good promoters. And it's only a breathing time that these projects require. Of course, banks are on their side working on sorting out these issues. I'm told finally the regulator has come around to allowing 5 by 25 also for existing projects. But I don't know if the notification has come out as yet or no. But some announcement was made. We've been talking about that for a long time. It's a very good move if that happens. And the indications are that you'll see a lower interest regime in the days to come. Indications, mind you, the government does not interfere in that process. It's again a regulated entity. But if those indications are to be believed, then I think in the years to come, we'll see what Mr. Vajpayee had done in 98 to 2004, literally bringing down interest rates to less than half of what they prevailed when we took government. I hope with its strong economic policies and focus on strengthening the economic growth in the country and reviving the manufacturing sector, we too hope to bring back that zing in the business with lower interest rates being an important component of that.
Well, I think we'll bring this session to a close. We've managed to stay on time. Just wanted to thank the Honorable Minister again. I think you've heard from somebody who not only understands the political challenges, the challenges of administration and coordination, but somebody who, having been part of the business community, understands the business perspective. So what I took away today, 2-3 very important things. One is that the Electricity Act itself is up for revision. Second is there is a determined and concerted, sustained effort to improve fuel supply in Coal India. And third, that even on gas, there is a prospect over time to make the 20,000 megawatts available useful as peaking capacity. So with these three things and the coal ordinance, it will take time, but and some cooperation from the Reserve Bank of India. We hopefully have the foundations being set for a massive correction of the problems that we have inherited. So thank you so much for your energy. Thank you so much for your time.
I don't accept mementos. Thank you. Thanks.
Let him just go. Well, we'll be now breaking for lunch. The lunch has been served at the Rani Bagh lawns. Request all the guests to gather around here by 2 o'clock. Also, requesting you to take a minute to fill up the feedback forms, which will help us cater to your needs better in the future. Thank you. We'll see you at 2 o'clock.